Many investors are unsure of when the stock market's going to recover after being severely damaged. Legendary investor Jim Rogers believes that the United States is experiencing a periodic collapse, and is even concerned about a possible world war. We have a lot of pessimism in the recent past, and whenever you have extreme pessimism, you often have something which comes to break it. People have started worrying less about inflation. However, the world is not okay now, and it's going to get worse as the war gets worse. In my view, this is a bear market rally. Inflation is calming down because nothing goes straight up. In any kind of market, things go up and they get corrected and then they go back down. Inflation is not going away because governments have printed so much money, more than ever in history. Inflation is not finished yet. In terms of coping in these times, Rogers, co-founder of the Quantum Fund and chairman of Rogers Holding, stated that he prefers to buy at a discount and then claims that commodities are the cheapest asset class. Silver is down 70% from its all-time high. Sugar is down 70%, he said. People haven't been rushing out and buying commodities in recent years. When it comes to asset classes, Rogers said he is mainly doing nothing right now. I am mainly watching. I do own commodities which usually benefit when you have inflation, and I have not been buying stocks. Well, I bought some stocks in Uzbekistan, but it is rarely enough to talk about. I'm always looking for opportunities, but mostly markets seem to be very strong, and I do not like buying strong stocks. Agriculture and silver are the most opportune trades, according to him. Agriculture has been a disaster for a long time. Maybe silver is down 70% from its all-time high, and that is obviously not a bubble. So I would say silver or agriculture. While expressing his opinions about the US dollar, Roger makes reference to the fact that the American currency has been quite strong and will eventually make its final leap upward. Roger also advised investors to bet on what they know as markets for stocks, bonds, and cryptocurrencies saw negative patterns in 2022. If you want to be successful, stay with what you know, he advised. If you don't know anything, do nothing. Put your money in the bank and wait. Roger, a commodity trader who joined George Soros after beginning his career as a Wall Street analyst, advised investors not to become very emotional if they lose money. If you just rush in when you're emotionally wounded after losing a lot of money, you're usually going to make even more mistakes, he said. My best advice to people at that stage is to do nothing. Close the window and just wait and recover. Wait until you find something that you know is going to be good. Do not get emotional. Rogers added that he had previously made mistakes that had helped him to learn these difficult lessons. He mentioned early in his career that he took a major short position that cost him a lot of money. I once had a great success in these markets, a gigantic success, he explained. I got cocky and so I said I'd wait for the market rally and then I'd sell short. And I did. The market rallied and I sold short, but 3 or 4 months later, I was wiped out. Most of the companies I shorted went bankrupt at the end, but I lost everything first. He attributed his early mistakes to not knowing a lot about the markets at the time. Jim Rogers also sees opportunities for investors in Asia, particularly in China. The changes in Asia are astonishing, he said. A lot of money is flocking to Asia. China has the largest foreign currency reserve in the world. Japan is number 2 and Korea has a huge number. According to Jim Rogers, the economies of China and India will certainly overtake the US in a shorter period of time. Around 2035, China is predicted to become the largest economy on Earth. According to Goldman Sachs research, India will become the second by 2075. Also, China's Xi is attempting to re-establish yen-based energy commerce with Saudi Arabia, which would be weakening dominance of the US dollar in global trade. The US is the largest debater state in the world, 40 years ago at least. It was the creditor nation, so changes are taking place, he said. When countries get overextended, they usually go into a decline.